All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this evening as we take a look at the technicals and the fundamentals to see what opportunities are out there for us in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. So if everybody can hear me loud and clear, please drop me a one in the chat and we can get this session going. So lots and lots to talk about this evening. Okay, so let me go ahead and close this out. Just some things, and we can come and take a look at the Forex Factory. Give me 1 second, everybody. Some more people log on. Hold on 1 second. All right, sorry about that, everybody. I am back. So let's take a look at the Forex Factory. And let me scroll up a little bit. And when we take a look at today, the 30th, right? So the big thing today, we had preliminary CPI come through, and it is hot. So if we come up and we take a look at Germany, inflation rate rises more than expected. Okay, we know that Germany is the biggest player in the Eurozone, so that's putting a lot of pressure on the ECB is going to have to do something, right? When you got Germany and they've got an inflation rate that rises more than expected, an increase to 7.9% in August, slightly above the market forecast of 7.8, and again reaching the highest level. So that's going to be important as we talk about monetary policy with the ECB going forward. So still globally fighting inflation. We've got good numbers for right. So despite the high inflation, we got good consumer confidence numbers coming out 103.2. The forecast was 97.6. So that was good here in the United States. And then we've got the job openings, right? We've got more openings, right? We've got things, jobs being created, job openings. So seemed like, hey, fighting through it, fighting through the inflation, trying to keep things on the up and up the best we can. So that was some positive data today coming out of the United States. And then going into Wednesday, pretty light, except for at 8:15, you got the ADP non-farm employment change report. So we know that that could be right on point with non-farm payroll, and it could be way off. So it's always important because it can create some volatility in the market. So the forecast is 300K, nice round number. We'll see how that comes out on Wednesday at 8:15. And then Thursday, we got CPI coming out for the Swissy. So, hey, a few things out there that can make the market move as we head into the fall. So typically you hear talk in the market that during your summer months, you know, people go on vacation, you start the market, you don't get as much volatility. That has not really been the case. We had a couple periods of slowdown, but it's been pretty active, you know, as central banks continue to fight the inflation battle. And are we in a recession? Are we not in a recession? So it stayed pretty volatile over the summer, at least in my opinion. But now we are back into the fall. So If that summer is considered slow, which I don't think it was, then we should definitely see things speed up as we move into September. We've got ISM manufacturing coming up on Thursday as well. So the beat goes on. And then on Friday, September the 2nd, we've got non-farm payroll, right? First Friday of every month. So it seems like we just had one. The last one was explosive. So we'll see. We've got a forecast of 295 for the non-farm employment change. We'll see where we came out. Previous was 528. Okay, so they're downplaying this one on the forecast. We'll see what happens. We will see what happens. But that is that on the fundamental front in regards to calendar events that can create some volatility. Welcome to everybody that just joined us. Let me make sure that we get everybody's mic in order. And all we ask is that, hey, if you're not making a comment or asking a question, please do your best to keep your microphones on mute. Okay, I think everybody is all set. Yes, okay. Everybody is good. All right. Ryan, good evening, sir. How are you?
Good evening, bro. I'm doing well. How are you?
Doing pretty good, man. How's the leg?
It's coming along, man. Slow motion,
Yeah.
but we're getting there.
All right. All right. So keep me updated, man. Keep me updated. Follow the doctor's orders.
I'm working on it. My wife says otherwise, but you know.
I know you like to get up and go, so it's all good. It's all good. So we've got here in Trading Economics, U.S. stocks fall for the third session. You know, Chairman Powell came out, did his thing at Jackson Hole. So nothing different really. Hey, we're gonna be aggressive. So it's what people hope, and then there's the reality. We've got an inflation issue, and the Fed's job is to bring all of that stuff in order. Okay, get it back down to that target range of 2 to 3%. So they're going to be aggressive for a while. Of course, the market moves in waves, so dollar's going to have its times where it corrects, but we are dealing with a strong dollar. And the rest of the world, right? A lot of the central bankers are complaining about their strong dollar, but I guess right now it is what it is. We got crude oil that's fell 5%, so that continues to bounce around. So a whole lot of the same, different day. So tonight we are going to, before we jump into these pairs, we want to talk about, because we get a lot of questions. A lot of times, what we decide to cover in some of these sessions depends on, you know, if we get a lot of questions, a lot of comments, a lot of feedback, and a lot of people are asking about the prop firm opportunity, especially those who have been with us for a while, right? A lot of you have gotten to the point, and some of you had started to move in that direction already, of saying, hey, I wouldn't mind a little bit more capital to play with. I believe in, Ryan, you can speak your piece on it too. I believe from, you know, the prop firms that I've traded with in the past, I think it's a great way to generate revenue for your own account, right? With the payouts, like you really could do quite well with a lot of these prop firms. They're all over the place now, and I think that's a great way to grow your own revenue and add money to your account. Is partnering with the prop firm so you can gain more leverage in the market by increasing the capital. I think is a great opportunity, and I think trading is the ultimate freedom. So Ryan, what do you think?
Yeah, man, it's a phenomenal opportunity when you're looking to grow an account and just looking at it from a business standpoint, right? When you're looking at building business and that kind of deal, the majority of businesses don't build and grow with their own money, right? They use other people's money to grow, expand, and all that. So it's a phenomenal opportunity. Once you really learn how to be consistent and hone in on your strategy to be able to implement that into their system and their rule and their framework to be able to grow and expand.
Yeah, I agree. And a lot of them have been, we got some new ones popping up, you know, some kind of popping up like movie sets. But there are some some really, really credible prop firms that have been out there for quite a long time, that do quite well, and they do well by the traders that they partner with. So drop me a one in the chat if you've heard about the prop firms, if you've thought about it, if you've been with one before. Drop me a one in the chat if you're kind of familiar with them. Okay. All right. All right. And I think it's the ultimate freedom. And you really can, to me, hey, you're up for it. You trade when you funded with E8, Reese. Okay. Awesome. Awesome. How long have you been funded, Reese? Let me see.
2 weeks.
2 weeks. Oh, that's good. Congrats. I've heard it. I've heard of EA.
Congratulations.
Yeah, they're pretty solid. So awesome. So we are going to, there's several out there, but we are going to cover one this evening that we really like a lot, called the Fivers, right? Drop me a two in the chat if you've ever heard of the Fivers. I appreciate the feedback, Reese. Super proud of you, man. Right? So people out there have heard about the Fivers, and the reason why we like this a lot, several reasons, and we'll go through some of them. Okay, I think it's an excellent opportunity, especially for folks who, I think just about every trader could trade, every style of trader, but especially for swing trading. Okay, especially for swing trading. So they have at the Fivers, they established in 2016. They've got an entire about page, right? It's Israeli based. They also have a location in the UK, in London, and a London office, and they're super credible. So you could choose your funding journey. Okay, you've got an instant funding option. And then you have what I think is really cool for a lot of people, a lot of newbies too, that your 100K boot camp. So you complete 3 challenge phases and you get funded with a 100K account. And the entry cost is 85 euros, right? And then your instant funding, where right away, boom, they hit you with an instant live account, starts from 235 bucks. So I'm gonna spend a little time tonight going through some of this because, hey, don't just take our word for it. You want to continue to do your own research. You had Reese said he was with E8. There are several out there, depending on your trading style and how you like to trade. But so when we take a look at it, you've got low risk options and you have aggressive options for the instant funding. Okay, so you've got your 24,000 level. You've got your 40,000 level, which they say this is their most popular. And then you have their 80,000 instant funding level. Okay. Now, they don't start you out, okay, at the 24, the 40, and the 80,000. Okay. All of these prop firms have some sort of a, trial period. This scenario here is instant funding, but there's still like an initial level. So at your $6,000, $24,000 level, your starter funding capital is going to be $6,000. Okay. Your profit target is going to be $375 or 6.2%. Okay. Here's your stop out level. So you're going for 375 on this account, but on that $6,000 of instant funding, right? You can't lose more than 360 bucks. Okay, 360 bucks. Your account leverage on the low risk scenario, okay, is 10 to 1. Okay, that's your leverage. 10 to 1. On the aggressive, is 30 to 1. Okay, that's your leverage. That's your account leverage. 10 to 1, 30 to 1. Okay. So that really, right, puts you into where when you talk about your account leverage, that's really like how you calculate your down payment for the trades that you take. Okay. So 10 to 1, 30 to 1. And a lot of people say, well, there's brokers out here that give you 50 to 1, 100 to 1, 1,000 to 1. I don't know if it's in 1,000, 1,000 to 1, but it seems like it gets out of control. But when you think about trading, um, it really, and when you truly understand risk management, you really don't need a high leverage requirement. Okay. A lot of times that ends up in disaster. Ryan, what do you think? That's what I've seen over the years.
I'm sorry, say that one more time, bro.
And just talking about as far as the leverage, like that super extreme high leverage is usually
Oh
where people
man,
get themselves in trouble.
they definitely get themselves in trouble. Major disasters, dumpster fires, and blown accounts quickly. Especially if you combine not calculating your risk with the leverage being so large and it essentially exacerbating what you already aren't doing. So it gets out of control big time, just like you said.
Absolutely. Absolutely. So good evening, Kim. So you really don't need that high leverage to be successful in the Forex market, especially when you're with a prop firm and you're utilizing their money. Okay. So 10 to 1 and that's in my opinion is more than enough. You got a 2% stop out requirement. Okay. So risk management, trade psychology is key. Now, this is the number one reason to me compared to other prop firms. Now, there's some more out there that's kind of going this route, but they're asking you to make 6.2% in this account. When you move over and you look at the 40K, they ask you to make 6%. And on the 80K account, which they start you out with 20,000 in instant funding, they ask you to make 7%. On the low risk, in the low risk scenario, the maximum time is 180 days, right? 180 days to make 6%, between 6 and 7%, right? Drop me a 2 if you think that's fair. Okay. This morning fair. They're a more conservative group, right? They really want you to build a solid track record, right? To see results, want to see many transactions. So they're not asking you to make 10% in 30 days, right? They're not asking you to do that. You don't have to be that aggressive. Now, some folks, that's the style, right? That's their style. That's how they like to trade. But this one, right? Yep, Jeremy, FTMO gives you 30 days, and they've started to make some adjustments. I know a while back, I think they changed the rule to, like, if you're within a certain percentage of gold, they can extend it for you now. Because that 30 days is tough. At 10%, can it be done? Yes. Can it be done consistently? That's tough. That's tough. Okay. 8%, that's tough. Whereas if you can make 2% per month over 12 months, that's a 24% return. You can do that consistently. There's all types of money out there for you if you could get that type of return per year, right? And there's a lot of data out there that supports that. Okay. So, 1 to 10 leverage, 180 days. They do have an aggressive 60 days, right? Still more than the 30 days, like an FTMO and some of the other ones. Okay. Again, it just depends on your style, how you like to trade. But here's the kicker. So if you come over here to this $80,000, say low risk, that's what you want to do. Okay. Now it's going to cost you 745 euros. Okay. They do the conversion, or the 40,385 to 35. Okay. At the 24,000. That's pretty much your down payment, right? For what you can lose. So 745 there, your max drawdown is $1,200. Right. So you could draw down $1,200. So you're pretty much losing your money and a little bit more, okay, that you put down. But the upside is tremendous, okay? Because once you hit your target, Okay, we'll use this instant 20K. Once you hit your target at 1,400, they 4 times your account to the 80K. So this is why it's an 80K account. So you hit the 1,400, boom, okay, $80,000. The good thing too is that what you invest, right, to get the account, once you hit the target, they return that money. They add it as a credit to the 80K account. Then you could withdraw, do whatever you want to do, right? So that could be returned to you. Okay, so you could scale these accounts all the way up to 4 million. To 4 million. All right. Any questions so far? No. Okay. Pretty clear cut. So when you look at the growth, so if we come over here and you look at how, this is where these platforms can really help you out if that's the way you want to go. So for your 80K risk manager funded account, okay, you have different levels. So here's your initial level, level 1 that we talked about. And then you can see here to 80K, where they multiply times 4 gets you to 80K. So look at that now. Look at how that accelerates. So it's still 6% here. Your 1 to 10 leverage, but now look at your maximum loss. It goes from 1,200 to 4,800 because now you're trading on a 80K account. Okay. So this really represents all of your leverage. So initial balance 80K because you don't have, and that this is the mistake that a lot of traders make. Okay. So just look at the numbers. You have an 80K account. Your next target is 8,000. Okay. Your maximum loss is 4,800. This is what you need to concentrate on. If you lose 4,800, this is gone. And that's the mistake when people calculate their risk and things like that. That's where they make the mistake and they end up over leveraged in a lot of these. And a lot of times they end up over leveraged too because of the time frame. Right? It's easy to get behind, hey, we all lose trades. You might start out in a losing streak, but if you have to make 10%, 8% in 30 days, right? Now you have to up that lot size a little bit and risk a little bit more, and that can get you in trouble. Okay. But now look at your 2%. Your max stop loss is 2% here at 20K. So that's $400 per trade. But look, you don't want to go anywhere near this. This is why we've been harping on risk management and really understanding that for so long. Because if you go in and you say, I'm going to risk $400 per trade, your maximum loss is only $1,200. So somebody do the quick math for me. If you go in and you max it out and you leverage high and you risk $400 per trade, how many trades can you take before you hit that $1,200 maximum stop? Bang, you're on it, right? Cassandra, Raphael, on it. Jeremy, on it. Okay, that's why we harp on this so much, is the risk management. You got 180 days, right? But look how it just progresses. Okay, look at how it just progresses. Same 1 to 10 leverage. Look at the next level, 4,800. So this is what you want to focus on, is that trade off of that, right? 1,600, and then look at how it climbs. Okay, look at how that climbs. Right now it says, give yourself some grace, give yourself some time. Look at how this accumulates. This is why we always talk about, think of everything in pips and percentage, right? Pips and percentage. So if you're looking at making on this first level 7% or so, your milestone target is 1,400, 7% or so. You to make 1% on the $20,000 account, that's $200. Think about that, right? How much leverage do I need with the type of setups that we look at, that we trade? Okay, how big of a lot size do I need to trade at? Right, 1% of $20, $200. So at $200 on the account, you've grown about 1%. Your target is 7%. Think about that, right? I know in my trading career, when I started to look at things and pips and percentage, everything kind of leveled out for me. Things weren't so intense anymore, right? I wasn't in so much of a rush, right? Because things start to compound on themselves. Okay. Look at your level 6 and look at your maximum loss that you can lose and look at your max stop loss on that. And think about the type of swing trading setups that we like to look for and the plays that we like to make. Okay. Any questions so far? Right. Pretty cut and dry. You make the investment, you invest in yourself. Okay. You invest in yourself. No questions? Oh, hold on one second. Yeah. Now, they're split for your instant funding because they're giving you instant funding. Their split gate is 50-50. I'm cool with that, right? I know some people 80-20, 90-10, right? I think they make some adjustments, right, as you get to these levels, but out the gate it's 50-50. I'm straight, right? That's good money to grow and fund your own account with. Okay, so we're always, the reason why we want to go over this because we're always talking about, for one, shortening the learning curve and compressing time frames. That applies to your trading account too, right? Because you need money to play in this game. A lot of times people end up over leveraged and they blow accounts because they don't have enough capital to begin with, right? And they're trying to grow that money, trying to get results so fast, right? So they can convince themselves that it's worthwhile. So you could partner with somebody like the Fighters. Okay, they've got excellent training resources. They have webinars, all types of stuff. Right, it's a well-ran organization. Okay, right, well-oiled organization. All right, they're really doing their thing, and they continue to make improvements. Okay, they continue to make improvements. So that's what that looks like. Then you can scale 40K. You want to start off less than that, but it scales, right? It scales. 10,000 to 40 to 80 to 160, 320, 640. Okay. And then of course your 24K. So really good. I'll put some of you probably already gone there already, but I'll put the link in the chat for it, so you can just take a look at it, review it. But we're trying to put it all together, right? From understanding the technicals and the fundamentals, getting consistent as a trader, first in your approach to the market, fundamentally and technically, and then, right, the revenue starts to come more consistently. Okay, the more consistent your approach, the more consistent your revenue can become, and then you have opportunities to compound that growth by partnering with a prop firm. So what I did, before I go to that, let me talk about this one here. Okay, they also have a 100K boot camp challenge model. Okay, where you just pay them 85 euros, okay? And you have 3 challenge phases. Okay, 25K challenge 1, the profit target is 1,500, maximum loss is 1,250. You hit that target, you move to challenge 2, okay, 50K, $3,000 profit target, $2,500 maximum loss. At that point, you can use leverage. They give you the maximum time for the 3 stages is 12 months overall. Okay, so you throw your leverage in here. And then a challenge 3, 75K starting balance, $4,500 profit target, $3,750 maximum loss. If you hit that, then you pay them the remaining money, 215 euros, after passing the challenge stages, and they give you 100K. Profit target 5%, maximum loss 4%, 1 to 10 leverage. Payout ratio is up to 100%. So if you're not interested in the instant funding, you want to try yourself, try the boot camp out, you can do that as well in multiple phases. So we just think it's a well-rounded program. Like I said, the number one thing for me was I don't need, because when you can accumulate pips, when you can find setups to accumulate pips, I don't need 50 to 1 leverage, 100 to 1 leverage. Don't need it, right? So the time frame was the biggest thing, because I think it really lowers the pressure on traders to hit you don't have to hit those very, very aggressive targets in a short period of time. Okay. So just wanted to cover that. And then we thought would be fun is, right, this is an actual, right, account, instant funding account, right? Fresh, right? Just pulled it down today. You can trade it in the group. We'll keep track of it. But you can see it's 20K, right? So this is the 80K level. This is the first stage, 20K. Target milestone is 1,400. Max drawdown is 1,200. Okay. 184 days. Max stop loss is $400. Start time 8:30. Right? Haven't even put a trade on it yet. And the end time is next March. Okay. So got quite some time. So we thought it would be fun. Hey, let's pull down an account and pop some trades in there. Tracks all your statistics, right, for you. Okay. Risk to reward ratio, average position size. So it's a decent back office. Okay. Of course, you can connect this to other things, right? Get some more detailed data, but for the most part, this will do. Okay. Gross profit, gross loss, net profit, the profit factor. It explains it all to you. Okay. Number of deals, number of trades, how many are profit, how many lost. Okay. Tracks your long and short positions, the total. Okay. So this will be fun. This will be fun to do. So we wanted to make sure, because we do get questions about it all the time, that we wanted to cover this one specifically, especially straight out the gate. All right. Any questions on that opportunity? Yes.
So looking at this, looking at the program you're in, so within 184 days, you have to make at least $1,400.
Yep.
Okay. And like for a program like this with the, what is it, the fibers, what's the qualifications? What do you have to do to qualify to, like, for the instant? I know the other one was the challenge, the 3 challenges, but what about the instant? Is there any sort of like test or?
This is it.
Oh, okay.
This is it. Now, the one thing that I like about them too is that when you request a payout, so you see here how the milestone target is $1,400. Okay. Yeah. And you go through the levels. Sometimes with some prop firms, say you go in and you say, I want to withdraw $400, that'll go against your target. They don't do that. They don't do that. So when you go through the levels and say the next, let me go through the growth. So say here at this 80K, and right here on this 80,000, this level 2, the milestone target is 8,000. So say you go through a month and you've made $2,000, and you say, you know what, on that 50-50 split, $1,000. That doesn't go against your milestone target. You're still $2,000 towards that target. You get what I'm saying?
Okay.
So they still try. So say you got up $2,000, right? You got $6,000 more dollars to go, but you wanted to withdraw, say $1,000. They don't come back and say, well, now you got $7,000 to hit the milestone target. The milestone target is still that $8,000. And
okay.
you've worked $2,000 towards it.
Got it. Okay. Wow.
Yeah. Yeah, that is, Kim. It's good. I thought it was great when we went through. When we first looked at this a long time ago. It's been around for a long time, but I thought that was excellent, because sometimes they do. So what it does is, with some companies, it forces you to keep that money in that account. keep that money in an account so you can keep trading because you want to get to that next target to get to that next level. But they don't do that. So it's worth it. So this is how you could take and you can say, you know what, I got a 3-year plan, I got a 4-year plan, more long-term approach to trading. For the 20K, for this 20K, this is the 20K instant funding. That's the 80 grand one, right? Is 735 euros, 745 euros. So they'll work the conversion. So whatever your currency is, it'll make the conversion for you. So yeah, so that's what you're putting down. You got $1,200 in drawdown. Okay, $1,200 in drawdown. So if you draw down before you hit that 1,400, okay, and you have to use your stops. I like this too because they force you to be disciplined. See, on that low risk, which is what I suggest, is you have to use a stop, whereas your aggressive is not. But I think you should just practice really good discipline at all times. That's just my opinion, right? You guys don't have to listen to me or Ryan or Casey, but I just think it's always good to protect your backside. So I think this is just a good structure for you to really develop as a disciplined trader. I really think it is.
Benny, after you've been consistent in trading, how long of a time do you think before is a decent amount of time? Say I'm consistent for 6 months to a year. Do you think you should have at least some time in between you taking these challenges?
That comes down to the trader. That really comes down to that's hard to tell because of the trader, because of the trader psychology. You don't want to get that, paralysis by analysis. I'm a firm believer too that at some point you gotta get in there and get it done. I think you miss 100% of the shots that you don't take.
That's good. That's good. Okay.
And it comes down to, who's better at investing than yourself. That's just what I believe. But that really comes down to feel and the confidence level as a trader. So Ryan, what do you think?
I agree.
Yeah.
It's all going to come down to that individual when they feel ready to go through that challenge.
Mm-hmm.
When you start to put or having other people put time frames on yourself, you're asking somebody else for it, it puts additional pressure, and psychologically it starts to shift things, right? And we talk about the time frames of these programs, and that's that same psychological pressure that comes if somebody else tells you, oh, you should do it in 2 weeks, 5 weeks, 5 months. You know what I mean? So it's all going to be based on the individual.
Thank you. Yeah, those answers are perfect. Thank you.
Oh, you're welcome. You're welcome. Jeremy, great question. What happens when you achieve the target before the 180 days? They send you an email and say, congratulations, right? And they move you to that next level. They move you to that next level in funding, right? Then soon after that, you get your credentials. That's pretty much how they all operate. Yeah. Also, I just think that it's the most fair program out there. I think the owner, what is his name? Ben Hur, I forget his name. He's on, like, if you look him up on YouTube, he's always out there talking. He's pretty transparent in regards to what they're trying to accomplish for traders, and as an organization. If you fail, you just do it over again. Yeah, no harm to take it's not. You learn from it. You learn, and the cool thing about these, all of these prop firms, they all have gotten, I've heard of some ones that aren't as dynamic, but they all have pretty good, back offices that track data. The key is in the data, right? Because you may say, like, man, like, I've made this many pips, but I'm negative. So am I over leveraged? Do I need to tighten down my stop? So it's all going to be in the data, and it tracks that for you. That's how you find. You constantly should be implementing and analyzing. So this forces you to do that. You know, your average position size, the average length in a trade. Okay, open trades, close. It tracks all of that, right? So we always urge people to get connected to something, whether it's with a prop firm or through any of these softwares out here that you can utilize to track and analyze your data, because that's where you can find like, okay, there's the negative trend in my trading, or this is the positive trend in my trading. I want to wait and be patient and wait for more of these plays, you know, to take place. You know, you should be tracking that. Well, when I take these shorter time frame trades, okay, they converted a lower percentage. How do I feel? Right? You should be journaling. Am I just really built to be a swing trader on the higher time frames? You know, or do I lack the patience and do I need to be on a lower time frame? So all of this stuff can help you out. It's the process. We always say be addicted to the process. Okay. So yeah. So you combine this, right? You're working out your risk. No, I don't know. I know traders who use it. I don't use it for analysis. I know it's pretty good though. My FX Blue, they got stuff out there. FX Blue, I think is another one. Um, there's a lot. What is it? Trade Walk that can journal stuff for you as well. There's a lot of good stuff out there that can track your data, because that's what it's really all about, man. You know, it's not about just feeling bad or sorry for yourself when you lose a trade. Find out why. Get excited when you find out, hey, this is why I lost. When you can answer why you lost the trade and see where you can get better and there's upside, that's when you really get excited. But you got to be willing to put in the work. Check out a hand up. Kim, what's up? What's up?
I was listening to one of Casey's YouTube videos, and I thought she mentioned someone, you or Ryan, having a journal or some kind of book she used to use. Is that still available?
Oh, yeah. So this here, we have to get the link. I don't have that link on here tonight, but I know we've posted. It's probably I think it's in our research section too, resource section inside the inner circle. But your calculator, right, that you can purchase and download, you know, and track your pairs. Okay. So I've already moved this one over.
I'll look for it.
Yeah,
Okay.
yeah, for sure. Because I've already made another copy, right, and put that 20,000 in there. So at a 1/4%, right? So we talked about that before, right? When we covered it, you get in the trade and you got a 50 pip loss. You're looking at a 125 pip profit. Okay, that's telling you at a 1/4% with a 50 pip stop loss. Same thing. It's just automating it, right? So we always say take your risk and divide it by your stop loss. That's telling me I can pretty much trade, right? $1.39, $1.30, pretty much 0.13, because you don't get the third digit. And that tells you where you're at. So the risk reward is 2.50. Hey, the most I can lose in this is $50, right? Potential loss, I can make 125. Okay, 125. And they do it. She's got it set up on the pip value. Right, we'll get into that lesson a whole nother day, right? Because the value of that currency, that base currency and that counter currency combined, there's a pip value for each currency. So it'll calculate it for you. And then you can tally your trades. So that's why, like, when you see like this this 10-to-1, right? So that leverage or that margin is like your down payment to make a trade. So when you look at this leverage 10-to-1, the way you calculate that, because you really want to know, like, well, what can I trade at? What's the down payment going to be for that? So if you have something like, I want to trade one mini lot, okay? So a micro lot, okay? So one micro lot equals 1,000 units of a currency. And we call it units because it depends on what currency, right, you're trading with. Right? You might be from Canada, you might be from the UK, so we just leave it as units. 1,000 units. So one mini lot, okay, that's $1, right? A micro lot is 10 cents. So one mini lot equals 10,000 units of currency. Okay? And one standard lot, okay, equals 100,000 units. Okay. All right. So that 10 cents a pip, 1 mini lot is 10,000 units of currency, right? Because when you look at 1 pip, okay, it takes how many pips, right? A pip is the smallest unit of measurement, right, for the currency. So somebody tell me, okay, how many pips in a penny? 100. Got it, right? And we got 100 pennies in a dollar, correct? Yes? No? I'm wrong right now? 100 pennies in a dollar, right?
Yes,
Yes.
that's correct.
Awesome. So what's 100 times 100?
$10,000.
10,000.
10,000, right? So you got 10,000 units, right? See that? See how that math works out? And 1 mini lot, because 1 mini lot is what? $1. Okay. So how you calculate that is you want to know, well, I want to trade 10,000 units. So you take that 10,000, if you've got 10 to 1 leverage, right? You take that $10,000, right? You say, I want to trade 1 mini lot. So you take that $10,000 and you divide that by 10. Okay. So what they need to hold, right, for a down payment, right? So when you go buy a house, you just put down a down payment. The house is $300,000. You don't pay $300,000 for it. You pay, right, whatever you pay, and then they give you the rest in the loan. That's your down payment. So that when they talk about margin and you talk about leverage, see, the more leverage you have, the less down payment you need to make. Okay. So if you take that $10,000 and you divide it by 10, that's $1,000. So for you to take that 1 mini lot trade, I want to trade 1 mini lot. I want to trade 10,000 units of currency. They're going to take and hold $1,000. Right. So on the aggressive, it's 30 to 1. Okay. So you want to trade that mini lot, 10,000 units. You want to trade 10,000 units of currency. You divide it by 30. It's like $333 they're going to hold. See, so the higher the leverage, that's what makes it enticing to people with these brokers. So give you 100 to 1 leverage, and you're like, yes. Why? Because it's less of a margin requirement. It's less of a down payment to make that trade. So I could take my $1,000 account and pop a standard on it and blow it all. The broker doesn't care, right? It's free will. Right? So that's where margin of leverage can be dangerous, right? And then you talk about things like your free margin, right? The amount of money that you can use for new trades. Okay, so when your trade is running, then your margin level. So the key is the reason why we say is so many, like we just don't say it to say it. The reason why we say trade small and scale into a trade when it goes in your direction, everybody, is that it keeps your margin from getting tied up. So you actually don't need that much leverage to be successful. Right? See, it all comes together. Okay? Because you don't, when you get, usually most brokers, and this, if you're dealing with a broker, you want to ask them that, like, what's my margin level percentage? Oftentimes, like, it's around 30%. So if you see a margin level, like you look in your phone, if you look in your MT5 or your MT4, you'll see stuff that says like free margin, margin level percentage, margin, equity, and balance, right? So you want to look at that margin level percentage. That's important because typically when it gets down to about 30%, they start to call margin on your account, which means they start to close out your orders, right? Because you're over leveraged, right? You're over leveraged. So that's why you trade small and add to your position when it goes your way. So you scale into the trade. That's why Ryan says stick your toes in the water, right? It's a method to the madness, right? We don't want to put you in the right direction. So that's how that all comes together. So if you didn't know how that works and leverage and why people are so attracted to it, that's why it's less of a down payment. Okay, it's kind of like, but what? Think about the housing crash. You know, in 07, 08, the housing market crashed. What happened? Everybody qualified. Why? No down payment. $500,000 house, no paperwork, no down payment, right? Everything blew up. And so will your trading account, right? If you don't watch it. So that's the whole point behind that. So you don't want your account to crash like the housing market. Okay, so think about that when you're looking at the setups. That's why this is important, right? Just regardless of what you use, we think this is an excellent tool. Use something to calculate your risk, because see, you can start adding these trades in, right? So 30 and 90, okay, and then you can see how my total risk, right? Because I'm risking 0.25% per position. See, I'm up to 50%. So you really want to start to watch, like, what's my max exposure if I'm in a trade? Okay, 120. Okay, and you go down and you can see how now I've got 3 trades in. Okay, so I'm almost to 1%. So I come in 45 and I go 90. Okay, so now I'm in at 1%. Okay, so you decide in your trade plan, what do I want my max exposure to be? And then you can scroll over and you'll see, right? I'm 0.25% each trade. So that stop loss, regardless of what my stop loss is in pips, it's still only going to represent a quarter. What shifts is the lot size I can trade at. So important to do the math. It's really what it comes down to, because we don't control the market. Always protect your backside. Dominique, you're right. No credit, bad credit. Yeah, on approved credit. It was crazy, right? So think about that. Think about that. Yeah, it's a lot that comes with that. Sounds good until it's not good. But yeah, so this is why we harp on risk management, man. It's not mastering this, mastering, technicals and all this good stuff is great. But if your risk management isn't intact, it's all for naught. It's all for naught. You can rent. There's probably a 1,000 strategies on YouTube that can work. But if people's risk management is bad, it doesn't matter. You're gonna blow up. You're gonna blow up. So but so a lot to think about. And then what you do is they give you an MT5 account. So you come over here to MT5, you see that? Real, okay. Real account. And there's all the pairs that they trade, right? So instant funding does have indices available. Yes.
Hey, Benny.
Yep.
Still just seeing the Fiverr screen.
Oh, okay. Yeah, hold on. Let me thanks for the heads up. There we go. You see it now?
Yes, sir.
Okay, cool. Appreciate it. So, they use MT5, right? So you go down, you can put it in your phone, they email you your credentials. All the prop firms do it. Okay, and then this is the trading platform on MT5. Some of them use MT4, MT5. Some people give you the option for both. Okay, but this is it, right? So if you want to place a trade on this account right now on a pair, right, you have the ability to do that. Okay. Just different features, right? Different features from MT4. I think it's this newer version is just a little less primitive, a little bit more dynamic. It'll mark, like one of the things that it'll do, like if I took a buy trade here in my TP, like it'll drop arrows, like it'll mark and leave a historical marker of where you were, like where you entered, where you took profit, things like that. But there's a lot, probably a lot more, way more than that. I don't really get into it because I really do all my markups and stuff like that off of Smart Trader anyway. Right, not just use this for entries, but yeah. So you can do the same thing. You can use this platform here. You can put it in your phone, right? So you can do your markups, on your Smart Trader, Trading View, whatever you use, and then you can plug it in, you know, on your phone or whatnot, or on your desktop. However you want to do that is it's totally up to you. So I just wanted to make sure that we covered that tonight. Any questions before we look at a few things before we wrap it up, before we start to transition? Or Ryan, anything to add?
No, sir. You covered it, man.
All right.
You covered it.
I have a quick question. This is about Smart Trader. I noticed you can connect brokers to Smart Traders, similar to, you know, you can do that on like TradingView as well. But is that, I don't hear you guys talk a lot about that. Connecting through Smart Trader, it sounds like it's just used for charting, and then you just go to your MT4.
Yeah, that's because I'm always on the move. You know, a lot of times, but you could trade. It's a cool platform to trade off of. You connected with your broker. If you connected with your broker, they don't have that ridiculous, crazy. They've got quite a few. They've upgraded a lot in regards to their broker list. But I know the owner of MTI, he's super conservative guy. You know, I think he's loosened up a bit over the years. But they would only roll with like those. In the beginning, it was like, you got Forex.com, you got Awanda. They were only really trying to deal with those highly regulated brokers. But over the years, they've expanded that list though. So it's just a matter of whether or not your broker that you use is on the list of brokers for Smart Trader.
Okay, got it. Got it.
But no, you could trade off of it.
Okay, because like now I will mock up on Smart Trader, go to TradingView where I have my Awanda connected, the demo to that. But then I can see it on my phone either via the Awanda app or my MT4 in Awanda.
Yeah, if you use an Awanda, you could connect Awanda to Smart Trader.
Okay, I'm just trying to, you know, so I don't have to go to two different sites. But I was just curious about that.
Yeah, you could connect Awanda to Smart Trader. They're on there. They're a regulated broker.
Okay. Got it. Thank you.
You're welcome. Yeah. Let's look forward to the growth level. Thanks for sharing. Oh, you're welcome, Kim. It is, and that opportunity it's gonna be there. You know, the key is getting your strategy down, your trade plan, and then going to work. So I wanted to take a look at somebody got a question about to say something.
I had a quick question to piggyback on the young lady who was asking about the platforms. I'm so totally new. I haven't selected the platforms, but I did hear, I think on one of Casey's videos, that you guys are going to do a beginning class from beginning pips to, I guess, to more advanced. And I was wondering what any of the material about MetaTrader and how to set up and get going and begin, will any of that information be involved in that teaching?
We usually don't. But
Okay.
we need to, that's something that we need to write down, but we typically don't that day. We usually go, you know, nuts and bolts on fundamentals and technicals.
Okay.
And it's typically a pretty long day. So we've never delved into that, like how to set up your MT4 and all that stuff. So
I haven't went through all my teachings yet. Is it one of the teachings that I'm going to get to?
For MT4, no. But and the main reason is because there's a lot of like with MT4 and stuff like that, there's a lot of videos out there. Yeah, either through like the MT4 platform itself, or through YouTube. So we never really delved into it.
That makes sense.
That doesn't mean that we don't need it.
Okay, Smart Trader have videos like that as well?
Oh yeah. Smart Trader's got they got marketplace, they got ideas. Let me go to more. Yeah, they've got a ton of like the Smart Hub tutorials right here. Yeah, they've got a lot in there.
Okay, then I'll go
Casey
with that
also
platform.
has a video.
Okay, thank you.
Sorry,
that's helpful.
Casey also has a video that walks through how to set up MetaTrader on your phone on her YouTube channel. It's also in the, if you log into the platform, go to additional resources, that video is also linked in there as well.
Awesome. Thank you so much.
For sure. So I wanted to take a look at a couple setups. So I want to take a look at this Euro Aussie trade. This is a pretty good example of like how these setups like play out, right? So you can see that immediate U-turn, okay, off of this level here. You see that AB boundary and that U-turn that we got to push back up on the Euro Aussie, but now, okay, so we got that immediate reversal. That shot up. That was one that we've been waiting on for a long time. That shot up through 2 take profit levels. Now, this is the key. So we've got these type 2 fibs moving to the upside. This is an opportunity, right, for folks that like to play these on the Euro Aussie, that counter, okay, that counter move back to your 382. That's 56 pips here. Okay, almost 60, then back, that's 100 pips to the 61.8. Now, the ideal play, right, if you like that, strictly that 80-20, is see if this can bounce around and get up here into your zone with the shallow retracement, okay, up in that level. So you're looking like something like this, okay. We know that oftentimes it's going to do a couple of things. It's either going to come straight down off the level, off the B boundary, or, okay, you're going to get that play where you get that shallow bounce, and then we move up to the zone and then back down. Okay. I love the 80-20s because it widens the opportunity. It widens the opportunity. Okay. So you may have it like, you know what? I only want to play that classic 80-20 play to the counter if this Euro Aussie continues to pump and move long, and you think that's going to happen, then maybe you don't play this short. You don't play the short here, but you will take it long for the buy price, right? At the buy price like that. Okay. So here, B to C, hey, I don't like that. So if it turns over now I'm just waiting for a good low price to see if price wants to continue to make higher highs and higher lows, because that's what it's doing. When you get those reversals like that, right? Here's a higher low. Here's a higher high. Will we make the higher low and then continue long off of this? Okay. Because if you come out to the daily, you can see where it's found a zone that is holding. See that swing low in the zone? We talk about that quite often. And now it's pushing up. So you start to think, maybe I get back to this daily level here. There's another high that came in. Okay. So you can mark this up like so. Okay. There's another high. We take that down. Okay. So maybe we correct and continue long. Okay, with this Euro Aussie, right, off of pretty much a double bottom there in the zone. Okay, we identified that quite a while ago. Okay, so now this is where we are on the 1. So those are how you can identify and play those moves. Whenever you get an AB bound and you get price to reverse, it's going to move in waves. Okay, so like here, okay, you don't have to look far to find an example. So here was your 80-20 right here. And you see that correction back down to the 382. So out of that zone, all right, it's over 100 pips just like that on a 1-hour chart. And then we continue long off the 382. This is where your trade rules come into play. If you don't take longs off of 382, then you wouldn't have taken that. Okay, you just let it go and do its thing. All right, so you have to have filters. It's like we always say, everything starts to look good. Okay, so that's the Euro Aussie. Okay, so if those are your type of setups, that's what that looks like on the 1. You could drop down to the 15, okay, and so on and so forth. Drop down to the 15. You can put your cloud. Am I going to get a break once it gets up? If it gets up in this 80-20 zone, am I going to get a break with the cloud? Am I going to get a trend line break? However you want to play it, but that's a type 2 or a sub fit is what we call it a lot of times, set up there. Okay. All right. A correction, then potentially a continuation. Yep, Joy Oanda does have a reps that'll help. They'll assign you a rep. They'll give you a call. Okay. So that's the Euro Aussie. Any questions on that?
No.
All right. Awesome, awesome. But that was a nice mover. Okay. The next one is that Euro CAD. Okay. Finally made the move. So that's on the 4 with the cloud. Let me darken that up a little bit. So you can see how it's made that U-turn, right? It just broke. So right now on your 4, say you got that bullish cloud coming in, that's all from identifying 80-20 zone. You guys see that? So if we take this off from that and we come to the default like that, you see how this has all just been messing around, right? And now it's trying to make that swing because we don't have that target yet. That's on the 4. If you come to the 1, look at that move, okay? Look at that move through the levels. So whether you use a trend line, whether you use a cloud, look at the move that it made. You had to be patient. You had to wait, but look at the explosive move. So if you come here, there's your trend line break. So if we go to, let me put my default one on. We'll just work through this one real quick. Right? Look at that. Boom. Right? I'll put that back later. Look how it came into your zone and reversed. Bang. Okay. So out of that zone, out of that area.
Sent it one in my travel bag, and I just used the regular
Question?
one at the front door because you know it's still square.
Yeah. Okay. So out of that zone, right, it's over 200 pips. Okay, that is up, right? It is at its highest point. So we got a good reaction there in that zone. So whether you use a trend line, whether you use a cloud, so we take this off, put our cloud in, right? And like that, bang. Okay, look at the break. Okay. So the cloud kept you out a lot of this mess here. Okay, if you don't like just loading the trade and let it do what it's gonna do, you want to be more precise. Look at how that cloud, see how it didn't break it. And it just danced around and did its thing, but then when it made its move, look, boom. Okay. So first you identify, okay? You identify the possible U-turn point, and then you set up the confirmations the way you see fit. So if we come back, take a look at it, and we run a fib off these lows, okay? You can see where we're starting to come into an extension area. So that's moving quite a ways up, okay? So just continue to watch that one because, right, whether it's a pullback or whether you want to play the correction, once it makes a move to the downside or the continuation, because if you look at the daily on this UCAD, look at how it's spinning about in the zone. Okay. All right, look at that. Okay. That nice V shape, that swing low, held at those levels because you got a daily 80-20 scenario. Okay. So we'll continue to watch that. So if you're looking at this like on your cloud or whatnot, so we've got those levels now. We clear this out. All right. If you're looking at this is a cloud play, and you're thinking, zero is starting to get some strength. Inflation numbers came out. You're thinking about, hey, I'm bullish for right now in this correction on the euro. Then you may look at it like this. Look, see, correction eventually. If it holds, see how you got that gap, that TK gap right there between your Tinkerson and your Keejensen. Okay, not quite to that D extension yet, but eventually price will gravitate. Boom. Okay, it's extended right now. Okay. Now, if your bias is bullish, then you let it come down, test the zone, right? Tinkerson, Keejensen acting as support, cloud acts as support potentially, and then maybe you get a continuation up. Okay. So it's all wave sequence. And so we'll see how that plays out. See if the euro continue to gain strength. Now we talked about it for a few weeks, right? Ryan really drilled it home. Hey, these euros are coming in at some lows, at some critical lows, right? We talked about that for quite some time, and now we're starting to get that reaction. Okay, yep, that euro GBP, that one kept running. So we got the initial move. I was looking for a correction on that though, but we haven't gotten it yet, but we may get it soon. There's that ABCD move, right? You guys remember when we marked that one up, right? We made that A6 retracement, exploded, hit target, and then it just kept running. New fib and it's running, but we're in the 80-20 zone. Broke above this daily level though at 85.84. So it's just a matter now, do we want to correct? Do we finally get that correction? It missed earlier. I think I posted one on the lower time frame, but it just kept running. If you look at the 4, right, that's a clean 80-20 there on the 4. It's just a matter of whether it's going to hold at this test at 85.84 or not. But that could be a nice move back down. Euro GBP, right? That's a nice move for the Euro GBP if it wants to do that. Okay, but eventually it's gonna correct. It's gonna correct itself. Okay. Yes. So that's the Euro GBP. So nice ABCD move there. That's just a classic textbook wave there. ABCD, beautiful. That was a projected target, overran it, actually went to the extension, 1.618, chased that daily resistance. And now it's just a matter of what's that correction gonna look like. You guys got this. You got it. You see it. All right, you see it. So you go to the Euro Swissy. Hey man, look. We say, hey, that crown, something's gotta happen there, right? Something's gotta happen off that reaction. That crown finished. And then look, boom. See that? You can't make this stuff up. Look at that swing. That's off the 4, right? That's over 100 pips. Makes you wait long time sometimes, but that's off the 4. So if we look at the cloud, right? Look at the break, right? So even, okay, off the cloud break, you still got 100 pips if you just waited for the break, okay? Now you got a bullish cloud, so it's like, hey, look how, see how extended this is? And remember, when you look at your Tinkerson and your Kijinson, it's not taking the average closing price of the last 20 periods like a simple moving average, right? It's taking the high and the low prices of a 9 periods, 26 periods, and it's divided by 2. So what these represent are equilibrium points. When does price come back to the equilibrium? And then from the point of equilibrium, who takes over, the bulls or the bears? That's the difference. Right? That's the difference. Okay. So you look for price to eventually work its way back and pull back. See how price pull back into your Tinkerson and your Kijinson? See how it's pulling back and they're supporting price. So it just depends, right, on how far, right, that wants to pull back. Look, if we've got a ABCD, we've got a 1.618D extension, that means the next time frame down, we already have a new fib. See? When you pick up on that, the opportunities are all over the place. Now, you see how on the 4-hour just broke the cloud, right? Your lower time frame is going to break the cloud first. Right? It's going to break. It's going to be levels. See? Now look at where we are. Okay? Now look at your gap. Same stuff over and over again. So when do we correct? Do I want to play that? Do I want to stay long with the euro against the Swiss? Well, then I just want to wait for it to come down. And then I'll look to get long. If evidence supports it, if I get confirmation, I'll look to get long again. Or do I play this 80-20? Same stuff. It's not rocket science either. It's not. Just spend some time on the chart, you'll see it. Okay? Identify the potential U-turn point. Then we wait. Then we wait. Okay? Oh, you're welcome, Mary. You're welcome. Okay. So that's that. That is, I wanted to go over those pairs to let you guys know, like, hey, we've extended. Now we're looking at a correction phase on these pairs. All right. So continue to keep an eye on your euros. Okay. Any questions on any of those pairs before we wrap it up?
No.
All right, I'm gonna leave it there. We covered a lot tonight, so I don't want to overwhelm anybody in regards to we
Oh, wait,
jumped from.
can we look at the NZD USD? Did you do that already?
Nope, we can take a look at it. We can take a look at it.
Or I came in late.
All right, that's okay. That's all right. So, right, what time frame you thinking about?
I think the 4 hour, I had made some notes earlier this morning. Go back to it really quick. Because I think I felt like I saw another 80-20 play.
Could be. It depends on where you're running your fib. So this is your overall fib, right? And now we know we've got these legs running. Okay, so you might have it off the high. Nope, not there. Let's see. We know it's down, right? We know it's just moving to the downside. But you came in, maybe found a smaller wave. Not sure. Yeah, you probably was. That's okay. That's okay. But overall, right? We went over this a while ago off your trend line break to the downside. Okay, so we're looking at dollar strength overall. Okay, New Zealand commodity currency, it may take a little bit of a hit. Anything time you get those fears, in regards to demand, your commodity currencies can kind of take a hit to the downside. So we're just moving down a little bit all over the place, but moving down for the most part on the NZD USD.
Okay.
Yeah.
I don't know what I was looking at then. I don't know why I had that on my notes.
That's all right. That's all right. That's all right. If you figure it out, we catch it in the next session too. So, JC.
Hey Benny,
Hey.
I want to go back to Euro Aussie. I'm trying to work through my trading plan and work without the fib so much.
Yeah, that's cool.
I got a trend line, a bear trend line going down, and on the 4 hour, I got this big break with this bull candle.
Right here.
And so in my mind, it's like, okay, there's strong trend line break. And so my initial thought is that it's going up, but you said that it could be an 80-20 play. Is it like to take back some of that candle?
Yeah. So exactly. So for example, like when it moves, so it moves in waves like here. See that move and then it pull back. Okay. So now it's in another area where it might just be ready to come back and pull back.
Okay.
See? But that's making higher highs, higher low. Higher high, higher low. Yeah, I see what you're saying.
Okay.
I got you. I'm with you on that. You're just focusing on that price, that raw price action, right?
I'm trying, but it's hard.
It's all right. It's all right. Look, you got it. Okay. So we start to think. See that level came in there, right? See it?
Yeah. Okay. And that's what I had too. Yeah, I got that 4 hour resistance right there too.
Yeah, so you got it. So sometimes that's telling you something. It took a lot to break that level.
Okay.
All right. It took a lot to break that level. See, this was a previous level there. See?
Yep. That's what I got.
Right. Past support becoming future resistance. And it just took a lot to push through it. So now it's just a matter of, does it want to correct and retest the zone before continuing long if that's what it wants to do?
Okay.
Yeah, you got it. Good job.
Thanks.
Any other questions before we close out? There's a lot of stuff setting up, but I don't want to keep everybody. After what we covered with the prop primes, we went through a ton. So anything else before we wrap it up? That was a nice
No,
move.
sir. Great session, man.
That's it.
Great session.
It was a great session. It really was. Thank you.
You're welcome. Appreciate it. But hey, guess what? We'll be right back at it not too long from now. 6:30 a.m. Eastern Standard Time for the pre-New York session with my man, Mr. Ryan Carter. So look forward to seeing everybody there that can make it in the morning. Until then, have a good evening, everybody.
Thank you.